everyone, and welcome back. I hope you are enjoying all of the sessions so far. So next up, we have a great panel. We will be talking about capital and deal flow in China's booming medtech market. I'm going to hand you straight over to the moderator for this session, Ari Silverman, who is the partner at Mavie Technologies. So Ari, over to you.
Thank you so much, Becky. It's been an exciting, it's been a turbulent year. It's been an unbelievable year, and a lot of things, a lot of COVID, IPO markets in China, lots of turbulence, and still yet lots of activity. So we're here today to discuss some of the perspectives coming in from China on the medtech. As Becky said, my name is Ari, Mavie Technologies. We are investment bankers focused on China, and I'm excited here to have Daniel, Jay, and Peggy join me. Daniel, you want to begin with your introduction?
My name is Daniel Wang, and I'm a managing partner of China Lux Innovation Investment Fund, managed by TAS Holding, a company originally from China, Tsinghua University, the top university of China. And myself, so I did my early education in Europe, mainly from University of Copenhagen in operations research, my PhD in operations research in the life science faculty. And my working experiences, I worked for United Nations for some years and also for international banks. After that, I joined KPMG as a business principal and then served TAS Holding to set up the fund in Luxembourg. So that's the background.
Thanks, Daniel. Jay?
Hi, Ari. My name is Jay Ying. I'm from Bioventure. Yeah, I started my career in medical technology space since my MBA in Lausanne, Switzerland. My school was IMD. So after the school MBA year, I joined Johnson & Johnson as a product manager in the cardiology space and spent some year in GE healthcare. And after GE, I joined the Microport to do the business development and acquisition. Then after Microport, I was with Jimmy Venture Partners, focused on the medical device area. And the recent 3 years, I was working for the Yuanbao, also named Bioventure. We are based in Suzhou, but focus on purely healthcare. Myself in charge of the medical device space for the fund, and we are managing around $1 billion, including 3 RMB funds and 1 US dollar funds. And right now we have already made over 90 investments across the board in China. And within that, 10 companies got listed in last year in Hong Kong and Shanghai Star Board. So 2020 is a turbulent year in China, but also a very blessing year for the medical device investment for us. Yeah. So, yeah.
Thanks, Jay. And Peggy, please.
Hi, everyone. My experiences, actually, I've already working for medical device area for 19 years. The first 10 years I was working, my background is actually regulatory. So the first 5 years I was working for TUSPARK, one of the most actually famous and biggest certification body in Europe, doing CE mark in FDA. And then the next 5 years, I was working for as general manager of MedSearch, which is the subsidiary of Germany-Deloitte, focusing on medical devices. Actually, during these 10 years, that was very interesting because that's the first 10 years of medical device industry in China to really have a great development. And then I created LongTech. LongTech is a venture capital fund. Actually, we are the first Chinese venture capital fund doing innovative medical device investment outside of China. So mostly cross-border, and the first fund to invest innovative medtech in Israel. And so we also did a lot of investments in Europe and United States. Previously we did a lot of minority investment. Then we changed our strategy and did some buyout investments. So to put this buyout and put more assets into this platform and to build up, we want to build up like kind of public company, and then we do small investment around that, and then yeah, build up nice companies. So this is my working experiences here. So Jay, hi.
Thank you. So you each have extremely impressive backgrounds. Excited and honored to be talking with each of you today. And a couple of themes from your introductions that popped up. You talked about, obviously, globally, it's been a very challenging year with lots of turbulence, but you've also talked about, you know, real success stories within China and how things in China are actually doing quite well. You know, Peggy, you mentioned the IPO market. Jay, you said blessing. I mean, some real positive trends. Peggy, let me start with you. Given this sort of challenge that's been happening in the world, COVID and turbulence and, you know, lack of growth, but yet at the same time, you know, some of the success that China is seeing with IPOs and growth and so forth. Tell us how you see the role of deals in medtech evolving the past year based on things that have been happening with the West.
That's a very long story. I think 2020 was a very special year and turbulent year, but actually in China, the IPO market extremely hot, and as well the international collaboration between the China capital market to the outsider, you know, industrial and startups are extremely hot as well. So as I remember that as we firstly flew to Israel in the year of 2011, so nobody was there. So only I, together with my partner, were there. And you know, when we start to talk about we want to license in some technologies from Israel to China, and people were just like so shocked. Are you crazy that? So they really thought that Chinese people are kind of, you know, they're not a lot of IP problems. So the technology, when we license our technologies to you, so where is our technology then, right? So these kind of questions. But definitely last year and this year, I think we know that a lot of some of the very nice and interesting deals in biotech, but more interesting is actually in medtech as well. That, for example, we have High Life and yeah, this license deal to Peijia, the Hong Kong Lisco. And some other strategics here in China, Microport or Venus, they have already bought those kind of companies, or even have equity investment, like kind of China Round. I think this kind of difference or development of the psychological issue that's a big step, I have to say.
Yeah, absolutely. Daniel, let me turn over to you. You clearly have a deep global mindset and view, given your experience. Tell us also how you see the evolving role of the West relative to China.
Yeah, sorry. I think the point is, I just mentioned the question. I think given the COVID situation, I think in China, the whole society, including the government, academics, and the civil society, we realize we need to improve the medical infrastructure. We need to improve the medical technology and devices to, you know, for testing for all those kind of, you know, related services, given the crisis. And then we have a demand to look more technologies outside the country and inside the country. So I think that the demand from China now is high to have both the Chinese technologies and Western technologies into China. So this gives an opportunity to, particularly to the Europeans, that's what I would say. And that is why we are in Europe and we are trying to find new opportunities there. Yeah.
Yeah. So Daniel, you talk about getting technology from the West. Peggy, you mentioned specifically the High Life deal with Peja, where that's bringing in technology from the West. Jay, I would be curious to hear some of your perspective on this notion of bringing technology from the West to China, what that looks like, and maybe even tell us a little bit more. Peggy mentioned a licensing model. Are you seeing licensing models? Are there other sort of models that you're seeing too?
Yeah, back into 2014, when I was head of BD in Microport, we built up a joint venture with Soaring Medical. Today's LivaNova. You probably know that deal. So we set up the first CRM joint venture between the two companies to make sure we have the collaboration structure between the two companies, so we can trust each other and bring the most innovative technology of these pacemaker and defibrillator into China. Why we adopt the joint venture structure instead of the licensing? I think the core issue is the trust issue, because we want to build a collaboration between the two companies in long term, not the short term. And we want to share the future revenue, enjoy the growth from the Chinese market. So when two companies first know each other, don't have the trust issue, we spend about 1.5 years to set up the trust. And finally, we found out the joint venture may be the most possible structure for the two companies to work together and share the future profit and trust each other.
Interesting. Daniel, just back to you. When you talk, so we see different types of models. Jay talked about the JV model, and Peggy mentioned licensing model. Daniel, what specific models are you seeing, and maybe specifically some of the deals that you've been working on recently?
Our deal, actually, we also participate Microport, acquisition of French company in a kind of robotic heart surgery. This is that is what Jay already mentioned. I think already a JV is already established as a Jay. I think so, right? Last October,
yeah.
By Microport with a RoboCash. So that's one kind of way we mean using JV. And then the others, like we are working with another company for IVD. So that is like we are also trying to establish a joint venture, is under discussion. And we are developing like licensing models. We want to handle that. And this is depending on, in the medical sector, we often have like we call CDMO, CMO, this kind of arrangement, and that definitely I think licensing is there. So this kind of a business model is kind of arrangement. We will find way for licensing. But as Jay already mentioned, as you mentioned that I think IP is a key issue for cooperation between China and Western world. But I think given my company, we are originated from Tsinghua University, the top technology university. And actually ourselves, we are a service provider in China, and possibly we are the largest one recognized by the Chinese society. So we face a lot of IP issue ourselves, but on the same time, I think if we work with the foreign companies, we have our experiences because we know how to protect our own technologies. And when we work with the foreign partners, we know how to help the foreign partners to work with us in the GP, in licensing, in all arrangement. So I think we do have a good knowledge in that area, and we can be a big, good help.
Peggy, let me shift back to you, because on the one hand, we're hearing a lot about the JV model and the RoboCath deal specifically. Obviously, is a very interesting deal. On the other hand, You've got the licensing. You mentioned High Life, for example. I'd like to hear some of the deals that you've been involved in recently in medtech. You know, how you see JV versus licensing opportunities for you. And you know, Daniel just mentioned IP, and Jay mentioned IP. Are there, you know, are you also seeing some of that as those concerns? Are there other concerns in some of the recent deals, transactions that are coming up from the West that you could share with us?
Okay, so actually we all mentioned different models. Actually, I'm pretty much, I think for different models will be suitable for a different stage of companies. For example, for very early stage company, I don't think either JV model, license model does not make any sense. Actually, I think for this kind of early stage company, what they need to do is really to make their technology proof of concept, or even to make the market recognize the value of this technology, right? So for this kind of thing, I think the equity deal is the best. And for JV model, which is more suitable for the company who has already got this sales revenue, and even have very strong, you know, sales distribution channels, or for example, what we mentioned with LivaNova and Microport deal. I think this is this kind of model, and LivaNova will really have the resources of Microport brought. And from China side, capital-wise or channel or market-wise, and for Microport, and definitely they have both the not only technology but the device and the market as well. So for a licensing model, which is more complicated, I have to say that actually from day one, as I started with my long-tech venture capital fund, I was trying to do this licensing deal in medtech. It's extremely tough, I have to say that, because Jay mentioned about this trust. You know, this trust can only be built up, you know, especially with early stage teams or new entrepreneurs. That's extremely tough. You need only 1 year, 2 years does not really make any sense. You may need to spend 5 or 10 years together with them, and you need to really, in the meanwhile, you need to really show your money that I can bring you money, I can bring you know-how, I can bring you this kind of industrial or all kinds of the resources, and to help you. And you are just responsible to give me this deliver the milestones of your technology proof of concept. And but that kind of thing is very, very tough. I think High Life has already been on the market raising money for quite a long while. Although they have, but I think they were not so successful. But then for Page, I think this mitral TMVR is now a very hot topic. So they have their first-in-man study, but how can really Page to use this first-in-man study data and to bring this technology into a device and then into a commercial device, you know, that's a long way to go. And more complicated, according to my experiences, is that when they got the money, okay, got the deal done, and the early stage company have this capital, will they be very supportive or collaborative by technology transfer? That's for me a very big question mark. So normally I would be very careful about this licensing model based on not very mature device, but still a technology. But for a device model, I think licensing or JV, that's gonna be a great model. And yeah, that's my experience. Yeah.
But I would just say, I just want to build on that for a minute, because we were involved in the licensing, as you I think you know, from
Right.
from the High Life deal.
Yeah, Eric, I have a question with you for the High Life case. Is that a purely licensing deal, or a licensing plus equity investment?
No, it was a pure licensing deal, and I think, you know, as Peggy captured it well, which is, you know, you had a strong product with good clinical evidence in an area of interest, and a lot of very successful companies today in China looking in the mitral space. So, but it was a pure licensing deal. And at least, you know, from our vantage point, I have to say that we're seeing an increasingly large number of these kinds of deals of late. And it fits with, it's in line actually with what all of you are saying, which is, you know, you're seeing right now China doing extremely well and looking for new innovation to the West. On the West side, there's a need for a capital, and I would say also a realization, you know, that, you know, a strong Chinese partner can help them to be more successful. And there's a lot more value to be created in working with the Chinese partner. And you sort of bring these factors together. And the terms of the deals are basically set up, you know, with milestones, attractive milestones that work towards building that long-term trust. I agree, trust is a critical success of every deal that I've worked on. Trust is a critical success, and you're right, trust is not built overnight. But you can structurally set up some incentives, at least, for collaboration, and then over time, that, you know, that combined with the progress of the product to date and the clinical evidence of the product to date is a story that can be quite interesting for many. Maybe building on that, I'm gonna, you obviously, each of you yourself are, you know, extremely successful in your own right and looking for cross-border opportunities. I'd like to ask each of you, what are the kinds of deals that you're looking for from the West, and what are the things that you're most interested in? And if you want to highlight any differences between, you know, American or European partners, I think that would also be interesting for the audience. Daniel, why don't we start with you?
Okay, I can actually talk kind of also following what we just discussed. So what we look at it is, for example, European medtech with a very good potential in China, and then we become a strategic investor, not only a finance one. So in that case, we have assumption, okay, they have a good technology, and they have very good potential in China. So, and then we invest exactly as Jay just asked you question. You are talking about, you know, is it equity or is a licensing? So it's all combined together. Actually, our strategy. So we invest a share to the European companies, and then we also because their potential in China, we also set up joint venture in China. So that is our interest as a cure, that we make effort for the European company, and then we have our interest in the GV and also at the headquarters. And on the same time, the licensing happened from the European company to the GV, we established together. So that is quite kind of a comprehensive cooperation that I could answer to you. And that's the way we want to invest. Yeah.
Yes, exactly. So you're not just a pure financial investor, but you also see it as an opportunity for the Chinese market, and that allows you to build the trust that we've been talking about and to bring the technology to China that we've been talking about. And I think you had mentioned the RoboCath deal. So I think that's, you know, exactly that kind of deal where it's an equity plus JV, where it's a long-term opportunity. Jay, tell us the kinds of same question. You know, tell us a bit of the things that you are as from the Chinese side. What kind of partners and opportunities are you looking for from the West?
Yeah, today we are viewing Europe as a source of innovation. So we are looking for the cutting stage technologies from Europe and the US. The purpose is to enrich our portfolio for the company we invested. Because today, the medtech companies in China are facing some big challenges. One of the biggest one is tendering, either national tendering or the provincial tendering. Each tendering can bring the price down for 90%. Just like recently happened in the drug-eluting stents and the balloon area. So for the companies we invested, or for the companies we are going to invest and bring to IPO, we are looking for, first, we're looking for more products rather than just a single one big products as in their portfolio. Secondly, we need to look for the more innovations. Ideally, will be one innovation per 2 or 3 years. So in that way, we can have a matrix of products with a better pricing during the tendering. So each time we reduce price from in the tendering, we can bring up a next one. In this way, we're looking for innovations, either revolutionary or the minor innovation. So Europe could be a source of the innovation, and secondly, Europe could be a source of revenue for some of our companies invested already. Specifically for the technology, we're looking for electrophysiology, next generation pacemakers, and we're looking at the tumor area treatment for the tumor, because in this either it's a lot of different tumor may need a different portfolio of surgical solutions or diagnostic solutions, which are the opportunities we're looking at. And another big trend for us is the diagnostic. I'm talking about the digital diagnostic, either with AI or digitally transform the patient experience. So diagnostic in the future will be benefiting from the national tendering, because the surgery price, implant price will be cut down, and the diagnostic will make a little bit complement for that. So these are the areas we're looking at. And for the way of investment, we're looking at the licensing, and we don't like, we're considering the equity investment as well, but the equity investment, there's I would say like VC cannot manage deals just 500 miles away. So there's a management issue for us. Licensing and joint venture may be a better option for us. Yeah.
Okay, and Peggy, are you also similar? So we're hearing a lot of specific innovation coming through JV and licensing, and Daniel talked about the equity plus JV model. Peggy, what are the kinds of things that you're looking for?
We're quite flexible. Actually, we also differentiate from early stage and mature products. So early stage technology will do equity investment, but we want to have an kind of ROFR for M&A. So this is what we look for. And for mature devices, then I think if the device is part of itself as a single asset, should be part of a package to enlarge the value of one company, and definitely we want a licensing deal. And if the device itself is a huge one, sure, and can really bear, for example, a single asset can endure one public company, and then we would love to really share the benefit of the China IPO market to our partners and to this JV. Yeah. Yeah.
Interesting. And how do you think about exit options for your Western deals and your Western partners?
For me, if early stage, just sell to us, and if
good option.
if mature, just join us. Yeah.
Great. Jay, same question to you, because I'm sure on the minds of a lot of on the Western side is, if the pure licensing deal is clear, you're getting royalties, but if you're setting up a JV or it's equity, how do you think about exits for yourself or exit for your partners? I mean, Peggy clearly, as Peggy says, one option is clearly a company like Mitrassist can make or any Chinese corporate can make an acquisition. How do you guys think about it?
Well, joint venture is like marriage. At the end of the marriage, either become one by through acquisition, or we go IPO. The joint venture or the Western partners can. We are thinking about maybe in the future we can bring our Western partner to the IPO in China. maybe in Hong Kong, or we together go to the New York for listing, or even in the future can be listing in Starboard in Shanghai. It's all possible. Yeah, but talk about this IPO. There's some restrictions when we consider the equity investment for in the Western companies. One major issue will be the headquarters. We like the headquarters of our partners to be flexible, which could be in the future move to China. That will be beneficiary for them to get listed in Shanghai or Shenzhen or even Hong Kong. So that's an issue I experienced in a lot of discussions with Western partners.
That's very interesting. Daniel, I want to ask you that question, and specifically around this IPO. Obviously, I think we've all said it, the IPO last year has been super hot, you know, in biotech and in medtech in China. And, you know, are you, as you think about it, what are, you know, do you think about the IPO option also, Daniel, for you? And do you also think about what are, you know, the headquarters an issue? Are there other issues that have come up? Jay, are there other issues also that have come up for you? Maybe I should let you finish first, Jay. Tell me about, so headquarters, any other issues that have come up, and then let's have Daniel share his.
Like Jay mentioned, I think we are also interested in thinking about like IPO of the GV, and that is because that is already in China. It's very easy to make it, you know, if they are good, and then we can go into the Chinese one market. And then if they are the headquarters, for example, is like in Europe. And because the valuation in Europe actually is much lower than our China Asia market for the stock exchange. So, and then it can be interesting for them that because valuation, if they come here, it will be higher. So that is interesting. That is one of the solution we think about when we invest and we think about the exit strategy. Yeah, that is, yeah.
Jay, are there, aside from headquarters, Jay, are there other issues that have come up in, as you think about the IPO path forward for the West, the IPO path in China for the West?
Yeah, there must be some presence of Chinese investors in the shareholding structure in the company, and I think the company must have a presence in China physically, and they must have either the manufacturing or majority of their sales in China. So that qualifies the company to be a Chinese Chinese characteristic company, so could be listed in China. And the other issue will be similar to the other Chinese companies IPO'd in China. There are some legal issues. Oh yeah, one thing I forgot is IP. I think the most IP will be owned by the company and owned by the company's entity in China.
Mm-hmm. Mm-hmm. Interesting. Peggy, is this, you know, as you consider exit options, has the IPO come up for you as an option for some of the deals that you do?
You mean the project solely, or
yeah, well, I mean, how do you I guess, how do you think about it? I mean, given I guess you have it, yeah, how do you think about it? Is there an IPO opportunity for the West in some of the things that you do, or it's different, I guess, because of the nature of your deals?
For the European company solely, I think it's going to be very hard, because you need to really have a China to have create the value from the China market. So you need a very good partner from China. So from our perspective, what we are trying to do is actually I just want to look at this as a tendency. So normally when we are talking about this early stage startups from Israel, Europe or United States, so normally M&A by strategics in Europe and the United States are the best option for them. So to be listed in NASDAQ, maybe not that interesting for them. Actually, I think China, we are now growing. The Chinese local companies are growing very fast to become powerful strategics. So strategics from China. So I think to have good partners together, with strategics here in China or other teams here in China, if you can find a good team to build up JV together, then you can go IPO happily together. And if not, I think China strategics can be the one to buy you out.
Mm-hmm. Well said. Well said. I'm going to bring this into the last phase of our discussion, which is, what's some of the advice that you would give to the Western audience who's thinking about either, moving into China, taking advantage of the China opportunity, or partnering or raising funds with yourselves or your peers. I'm going to ask each of you to sort of share, if you speak to the audience, what's some of the advice and things that you would give them to think about as it is from the Western perspective and working with Chinese, and maybe some of the lessons learned from your own experience, and spend some time talking about how things have changed over the last 12 months, and maybe therefore things that have how they should also need to adjust. So Daniel, I'll start with you. What advice would you give to our Western audience?
I think the first, based on my experiences in Europe, and also I grown up in China, I think we are talking about investment and technology. Actually, I want to go beyond that. I think lifestyle, the mentality of to manage business between the two, and that is very critical. I think so far, this is still a bigger challenge between the Western companies that are coming to China or Chinese company go to Europe. The lifestyle, the how do you call it? The lifestyle and the work for life, I think a European, for example, I give you just one example. It's like, okay, we try to make a deal. We try to make a deal, but the Europeans say, sorry, I'm going to on vacation next week. I cannot talk about the deal anymore. But on our side, the Chinese mentality is like, we decided the deal is a deal. Let's go on next Monday. And it will not happen. And then
Right.
we will lose the trust between the two sides because we don't work on the same page. That's the first. And the second is about the trust issue, and is related to IP issue. That it is. And the third one I would say is like also related to trust. It's about identify good partners to start. That's critical.
Yeah, very, very helpful. Jay, what's some of the advice that you would give for the West working with Chinese, and again, how things have changed over the last year, lessons learned from your own experience?
Yeah, I've been living, working and living in 3 different areas, Europe in my MBA year, and China for over 40 years, and the US, I've been working there for Johnson & Johnson and GE Healthcare. So I think there are a lot of difference between the 3 areas, but there are more same thing, same shared value and shared experience. We all look different. We're living in the world with buyers, but we are all investors, engineers, innovators, people who want to change the world. So who want to make money. And so I had a very good working experience when I make up the deal between Soaring and the Michael Port. We both want to make a deal. We both want to make CRM business in China. So we work out. But I also have very bad experience with American people in investment, in the equity investment, because they have very strange terms like a pay to play. So at the final day, we have to sell the company in very low price. So I think there are not too much difference between between people from Europe or America or China, but different mentality and different culture and different mindset. So my advice will be, you just need to be open and find the people you like and you trust, find a good partner, and embrace the difference between the culture, and you will find the good partner and get the success in this market. And China has been the second largest medical device market in the world, and it is already the biggest IPO market in the world. So why not just embrace the opportunity here in China and go out to China and don't how to say be self-inclusive so much. You know,
trust and mindset. Trust and open mindset.
Exactly.
We're going to give you the last word. What would be the advice that you would give to the West?
Okay, so Daniel mentioned about different lifestyles. So, but the experiences of from my side is that wherever the people or my partners are in Israel or in United States or in even in Italy, in Germany, they are all diligent. So when I want to work during the weekend, they work together with me during the weekend. So I think people have when people sharing the same target, and people can build up everything possible. And so the last chance I want to share with you is that we have very good food here, very nice food. You're gonna really enjoy your life here. We have very good people here. Very good people, professional people, diligent people, loyal people, and friendly people. So people are willing to share, and people are not going to take away your IP. So you can really find very good partnership here. You have great partners here in China, and most important thing is that in China currently the capital market is really in a very dynamic chemistry, and we can as long as you have good technology or device and you have the willing to partnering with the China partners, and you will find your very nice life here.
Excellent. So trust, open mindset. We talked about shared values, and of course, food, which having lived, a number of years in China myself, I can attest to, and I enjoy eating a lot. The food is delicious. So lots of markets attractive, very interesting partners. I think you've had a chance today to meet from 3 of really the top partners that you could find and work with in China, but of course there are others. Thank you so much for your time and your perspectives. It's been very interesting to hear each of you. Becky, I'm gonna turn it back over to you now.
Okay.
Thanks so much, Ari, and thank you to all of the panelists. So Jay, Daniel, Peggy, and of course Ari for moderating as well. Some really great insights into the medtech market within China, and I really do encourage everyone to reach out to any of the panelists to find out more. That is, after all, why we're here today, is to cultivate the network within life sciences. So thank you once again. I hope everyone watching enjoyed it. I'll see you back here in a few moments for our next session. Is your health tech innovator investment ready? And until then, I'll speak to you later.